Madison, and this is the Home Finance Minute. And today I'm going to be answering the question, what if you don't have the cash needed to close? This is a question that actually affects many of our home buyers today. And so we're going to jump on in and figure out what things we can do. Okay, so you are ready to buy a home. You've got good credit, you've got a steady, stable income, and the minor hiccup is maybe you don't have all the cash that you need. So what can you do? If you don't have the savings to put down the full down payment and pay the closing costs and all the other associated fees that go with home buying, what are your options? Well, first off, I've made a list here of several of the options you have available. Things like down payment assistance programs, seller concessions, gift funds, 0% down payment loan programs, assets that you might have that didn't consider, and secondary financing. So we're going to go through each one of those to see what would be the best fit for you. Okay, down payment assistance. This is a great option if you are short on cash for closing. We have had many borrowers use this to get into the homes that they have been wanting. So keep in mind when you are looking at down payment assistance as an option, and you're going to talk about this with your lender, and they would know the programs out there and the programs they're qualified to offer. Not every lender is able to offer every type of down payment assistance. So first off, down payment assistance programs are going to have their own set of guidelines and qualifications. You might qualify for the home loan and not be qualified for the down payment assistance. Some of these qualifications include whether or not you're a first-time home buyer. A lot of these programs are geared towards first-time home buyers, but not every single one is. There are programs out there for home buyers that have already owned a home. And a first-time home buyer is classified as someone who has not owned a home in 3 years. So if you bought a home 5 years ago, sold it, and are now have been renting for the past 5 years, then you are fine. You qualify as a first-time home buyer. Another qualification is income. A lot of times these programs have maximum income limits. A lot of them are based off the average median income of an area, which you can find on Google. You can Google your county and put average median income and it will come up. You can find those different information, and they'll have a parameter and say you can't make more than this. Also in credit. Your credit score is going to affect whether or not you qualify for these programs, and they'll have a set minimum credit score that you can use to qualify. Also, some of these programs are zip code specific, not all of them. In the state of Florida, we have a great program called Hometown Heroes. This is a statewide program. It is geared towards first-time home buyers. It offers a percentage of the sale price in down payment assistance up to a specific amount, and they're getting ready to tweak it and make some changes, so I won't go into specifics, but this is a really, really great program, and it was rolled out last year in 2022, and it has helped so many borrowers get into homes. Also, something to keep in mind is down payment assistance comes in many forms. Sometimes it comes in grants. Sometimes it comes in the form of secondary loans. In fact, that's pretty common, that your down payment assistance will be a second lien on your home. So you'll have your first lien, which is your mortgage, and you'll have a secondary lien, which will be the down payment assistance. And depending upon what you qualify for and what program you've applied for, it could be a forgivable down payment secondary loan, or it could be non-forgivable, meaning you have to pay it back. So there are all kinds of variations on this. Some are, say, if you live in the house for 5 years, then we will forgive you the loan. Some say you have to pay it back at 1% greater than your interest rate on your loan. There's complete different variations. Some have it you have to pay back and you pay 0% interest. So just check with your lender. You're going to talk with them and you're going to ask what's available in your area, what you might qualify for, and what their guides are and what that would look like. That is just a brief summary. Down payment assistance is a really good option, and it might work for you. Okay, next up is seller concessions, and this is one I love as well. I've used it myself. I've had other borrowers use it. It's a great option. What is it? Seller concessions is when you get the seller to agree to pay a percentage of your fees and closing costs. The different loan products offer different percentages that the seller can pay. This can be a really, really helpful option if you are needing a little extra cash to help you close. FHA, first off, they allow up to 6% in seller concessions. So in that case, you would put down your 3.5% down payment, and then the seller could cover the rest. Bear in mind that seller concessions can also flow in with a down payment assistance program. So you could possibly qualify for a down payment assistance program and still have seller concessions. So you really don't have to come to the table with much. But you would discuss those options ahead of time with your lender so that they could be prepared. You'd also talk with your realtor about it and tell them what you're looking for and what you need so that they also can be prepared to write the contract properly. So let's move on to conventional. Conventional is a little bit different. There are actual tiers, and I didn't list it here, but I'm going to tell you. So if you want, you can take notes, or it's very readily available on Google. First off is anything under 10%. Conventional will allow 3% seller concessions. And again, seller concessions are based upon the sale price of the home. So if you go past 10%, 10 to 25%, you're looking at 6% in seller concessions. Anything over 25% down payment would allow you to have 9% in seller concessions. Excuse me. There is one caveat. If you're purchasing an investment property, it doesn't matter what your down payment is. The maximum seller concession allowed for a conventional loan on investment properties is 2%. So other loan programs that you may use are VA. VA is a great program for our veterans. We're so thankful for them and for the service they've offered. And if you're a veteran, we just thank you. And with that, you get a great loan program. You get 100% financing and 4% in seller concessions. And it's just been a wonderful program for those who can use it. USDA is another program through the government offers. It is zip code specific. USDA means that you need to purchase a home in a rural area. If you do that, you can also get possibly 100% financing. Again, it depends on your qualifications. And you can get up to 6% in seller concessions. You'd be surprised too. Look up your zip code. You'd be surprised at some of the areas that actually are classified as rural. So those are our seller concessions. A tip or a trick that you could use when searching for a home is you're going to talk to your realtor. You're going to tell them, hey, I need the seller to pay my closing costs. They would need to know that ahead of time before they put an offer in on a home. This makes the process go a lot smoother. One option that you have is to say to the seller, I'm going to offer you above asking price. Now, you're going to talk to your realtor and make sure this is realistic, that the appraisal, estimated appraisal will come in above asking price. And you're going to say, I'd like to pay a little bit more. It's not going to affect your mortgage payment all that much. Will you pay my closing costs? And that is one scenario that you could use that in. Another scenario is maybe the house is set on the market for a little bit. And again, you can come in, offer what they've asked or offer below and say, I need you to pay my closing costs. Your house has been sitting there. So many options. And like I said, because housing has gotten pretty pricey and interest rates are high, I think that there is room for the borrower to definitely negotiate this with the seller. And so you would talk to your realtor about that and work out a great deal for you. Okay, another way to get the cash you need to close are gift funds. Gift funds are a great option if you have a family member or blood relation that is able to give you a gift. This isn't a loan. They cannot expect the money back. It is a gift, and they're going to sign a letter stating that they're giving it to you as a gift. The other stipulation with gift funds is that sometimes, depending on the loan product, they might have to see the giver's bank statements. Why is that? So that they can track that the gift went from the giver to the recipient. Again, people who can give gifts are family members, blood relations, people related through adoption. It could be in-laws, could be your fiance or domestic partner. Those types of people are able to give you gift funds to help you with your cash to close. And if that's what you're going to be dependent upon, you and your lender are going to talk about that ahead of time so you can get all the necessary paperwork in place. But another really good option is gift funds if you have that available to you. All right, so we have 0% down payment loan products. This could help you if you are strapped for cash and needing to close on a loan. The reason being is you could use the cash you have for the closing costs and use these programs to have a 0% down payment. Or you might possibly combine two of our options and do a 0% loan product like I spoke about previously and get some seller concessions. So these are great options. Two of the most well-known options are your VA loans and your USDA loans. Both of them are going to have specific guidelines that you're going to have to meet. State specifically with a VA loan, you have to be a veteran or a widow of a veteran or something of that nature, and you're going to have to still go through their guidelines to qualify. USDA loans, they're going to qualify you based on the zip code that you're buying the home in. Also, they have their own set of qualifications. They have income maximum limits, and it's actually quite interesting. It's not just your maximum income limit, it's everyone in your household that they look at for income, whether or not they're on the loan. And so there are a lot of other little guidelines that the lender will go over and make sure you qualify for. But these are really, really good programs. So if you're in an area, I'd look up your address or look up an address of where you're thinking maybe you'd like to move and see maybe it qualifies under USDA. And for veterans, then you need to get your paperwork together to make sure you have all your certificates of eligibility and your DD 214 forms, and get all that together so that way you're prepared to access these awesome loan products. Assets. This is another category. It could be hidden assets that people might not think to use for cash needed to close on a home. So first off are retirement funds. Some people borrow or take out funds from a retirement account, 401k, different things like that. Other assets to consider might be, and I had a borrower that considered this at one point, was he had a motorcycle that he already had a truck, he had other things, and he had a motorcycle, and he was considering selling the motorcycle to purchase a home. And with those types of things, motorcycles, cars, boats, things that have maybe can be appraised, that have appraised value, those things we would need to see a bill, like an ownership statement, a bill of sale, and see those funds go into the account. So there are some steps you're going to want to take, and if you are already in the home buying process, you want to talk to your lender before you just sell something. You could also be selling stocks or different investment things that instruments that you have. Those would also qualify. Talk to your financial advisor as well as your lender, because some of these things, like if you're pulling funds from a retirement account, that could have tax implications. So could selling off stocks. If you got capital gains from those stocks, that could also have tax implications. And so this is one of those things that if you have assets, or you think you might have assets that you could use towards down payment or closing costs on a home, you want to really make sure you consider all your options, talk to your financial advisor, and talk to your lender before you go ahead and do that. Secondary financing. This is another option that your lender might have available for you to use. Secondary financing basically means you get two loans at the same time. So you have your first loan is your mortgage, and then you also get a second loan that is your down payment and possibly closing costs. This is called piggyback financing. You might be getting a second mortgage or a home equity line or loan along with your first mortgage. And certain loan products and certain lenders allow this kind of financing. So you would want to talk with your lender and see if it is an option for you. And they go ahead and allow you to have two loans on the house, but it's done simultaneously at the same time. So you apply for your mortgage and this. Now, this is not the same as down payment assistance where you have a second lien on the home that possibly is forgivable or maybe you have to pay back. This piggyback financing, you will have to qualify for both payments because they are two loans that you are required to pay back. But it is a good option if you need a little bit of extra cash and you have the income and credit to qualify. Okay, there you have it. A ton of options for you if you are needing a little extra cash to help you close. Maybe you're going to use down payment assistance or seller concessions. Maybe you have a family member that is willing to give a gift, or you're going to utilize a 0% down payment loan program. Maybe you have some hidden assets that you didn't realize, or you're just going to stick with some secondary financing. Whatever your situation, there might be an option for you. I would highly encourage you to speak with a lender before you get discouraged. There are tons of options available. I hope this video was helpful and you learned some great things that maybe you didn't know before. Like always, please go ahead and like and subscribe and share this video and let others know ways that they can get cash to close on their home. If you're in the states of Florida or even Texas, I am a licensed lender there. I work with the mortgage firm. All of my information is below. I would love to help you on your next home purchase. This has been the Home Finance Minute, and my name is Madison.